Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
But let's get someone who will better analyze all this for the medium term and the long term, and a very keen India observer, Teresa Barger, the co-founder and CEO of Cartica Management, who manages over $3 billion overall, of which $1 billion plus resides in the India portfolio, joins us now. Teresa, good morning, and thank you very much indeed for joining us this morning.
Well, thank you for having me.
Well, we have seen, the Shanghai market already go into a bear market year to date to below 10, losing 20% in 2018. What's your sense about India? We have so far found support for the Nifty at about 10,700. Do you think that there is enough for the index to plumb much lower this year?
Well, I think that India does have aspects of a safe haven, if you will, from the trade turmoil that China is going through. But India has a way of creating some self-inflicted wounds along the way. I like the medium-term cyclical story in India, and having a very big domestic market is very positive. But then we have to go through things like the long-term capital gains tax and the SEBI regulations on mutual funds, which have decimated the mid-cap space. So there's always something boiling in India. I guess, and now we have the corporate governance issues at not only the PSU banks, but the private banks.
Okay, so
that's
Teresa,
a neat summary of our problems, I must say.
So what would you do now as an investor? I mean, for the rest of the year, how do the markets stack up, and what's your favorite market to invest into?
Well, I think we still like where our portfolio is, even though this has been one of the craziest quarters that we've really ever experienced. The news flow has just been torrential. But in India, for example, speaking of the banks, we have seen high-quality governance banks like HDFC and RBL, which is in our portfolio, break away from ICICI, Access Bank, and those that are having corporate governance problems, either because there's a scandal or there's no succession planning, which is a real failure of corporate governance. So we still like that. As you know, famously, we're in a very expensive company in India called Page. And we've just done an analysis of Page because a lot of our investors say, how can you be in a company with 50, 60 times PE? So we used a Modigliani-Miller intrinsic value formula for that very expensive company. And when you look at it, in terms of its ability to reinvest at high ROICs over a long period of competitive advantage, which is what you get when you put things into this model. Those are the kinds of companies that get favored. And the intrinsic value, when you look at what's called commodity value and franchise value, according to Modigliani and Miller, you get a stock which, believe it or not, hold on to your seatbelts, could be valued as much as 90 times PE. So we do have to look at new ways of looking at companies in some of our India names. But it's still a name we like very much. So we are, strangely enough, even though India has faced depreciation and nervousness about elections, it still is somewhat insulated from the trade turmoil.
In fact, Teresa, good morning. I was talking to someone. He said this year you'll have to sort of, proof your portfolio from politics. And then looking at your portfolio, most of the stocks are at lifetime highs. So that way, it's been remarkable for you. You spoke about Page Industries, but RBL Bank, Cholamandalam, Marico, Eicher Motors, all doing well. And top 5 holdings, 42% of your portfolio is in top 5 holdings. You think it's going to be that kind of a year in India where you'll keep adding to these stocks only on dips, even though they look expensive?
Well, actually, we are, even though we have quite a concentration in India, our concentration has actually gone down a little bit, and we're a little bit more diversified. So we are in Brazil, for example, and I think right before I came on, they talked about Brazil climbing out in the last couple of days. Really, the last month has been not only the perfect storm for Brazil, but maybe the pluperfect storm. There weren't just 3 pieces of bad news, but about 5 pieces of bad news for Brazil this month, and or the last 4 weeks, I should say. And so I think there is room for Brazil to turn the corner, and probably a 60% chance of getting a new president that's at least a quasi-reformer, if not a complete reformer. They just need a few things that need to be done on the fiscal front, because that's their vulnerability. But we love the management teams there. We love the quality of the assets there. We love the ability of these companies to get high returns on invested capital. And we love the fact that so many Brazilian companies have used a recession to make themselves much more productive.
Okay. Teresa, in that case, will you expand this list of 5? I mean, I still don't find Bajaj Finance or the Bajaj twins in that.
Well, we are somewhat constrained that we're only in small and mid cap, and so we're not going to be in every name. We do rotate very slowly. We usually have long-term relationships with the companies we're in. So right now, we have rotated a little bit from your list that you can't see there, but we are pretty happy with the portfolio globally that we have of about 22 stocks.
So you also have some of these rural-focused stocks on your list, names like Marico. What is your view on how that story will play out? Because it's been a sort of a 6 month to 1 year play out already. You think there's lots more to go for some of these rural themes?
Well, we saw this before in about 2010, where rural Indian GDP was outpacing urban Indian GDP. Those are anomalies. In general, over a long period of time, rural GDP does not or cannot outpace urban GDP. But in a run-up to election, when politicians like to, as my partner says, buy love, you then can see some distortions that lead to higher rural growth. But it's not something that I would expect. I'm looking for overall growth and productivity in India. I think the building the roads, railroads, getting some of that infrastructure in place will in fact lead to higher productivity in India. We are modestly hopeful that we're seeing signs of investment finally. I think I probably say that every time I come on, because India desperately needs the productivity. As you know, there are only 2 stools to potential growth.
Yes.
And one is demographics, which you have. And it's a problem only in finding people jobs, but it's not a problem in availability of workers. And the other, of course, is productivity. So I think that's really the key in India. And we're probably going to see, there's plenty of room for productivity growth in rural area India, but we will probably see productivity growth growing more in urban India over the next 3 to 5 years.
Yeah, that's an interesting point. The other stock which has made a lot of money for you has been Eicher Motors. But over the last 2 years or so, it's gone a bit sideways. You think it's now fully pricing in the big growth story, or is this just one of those phases, consolidates, and then will again sort of break out?
Well, I think it still has legs. I think that when their backlog got less impressive, investors turned off a little bit, but that's because they built new capacity. They also moved their engineering to the UK, and for the long run, I think that was probably a reasonable decision to make. And in the future, it really will depend on them being able to go from 600,000 to 700,000 to 800,000 bikes, and to also open up the export markets, not even dramatically, but just reasonably. They are kind of a cool brand outside India as well, because they're so niche. If they become a little more mainstream, we'll see what happens. But also the price point is very low internationally. So I think that they definitely could have some legs there, and they've got the capacity to continue producing at very good margins. I think that's really where they stand out.
Teresa, I'm really tantalized by the fact that you have changed your list a bit, and there are some more stocks which you haven't yet told us, which are not in the public domain. But would they be in the consumption space? I mean, the pizza guys have done exceptionally well year to date. So have the footwear guys. I mean, if it's Bata or Jubilant Food. So the new additions, would they be in consumption?
No, we don't have new additions. We just have one subtraction.
Oh,
I'm sorry to disappoint. Sorry to disappoint.
okay. Well, what about IT companies? That's the other segment that's, especially in the mid-cap space, you know, the way NIIT or Hexaware have done year to date, rising about between 25 and 50%. Is that a space that at least you will look at?
You know, we have looked at it in the past, and some of the teams there are very impressive. But the issue is, of course, they become more competitive with devaluation, and that's good as a hedge, but it also makes them a little bit volatile because they do better or worse depending on the currency. So while sometimes you might like the hedge, I think the real long-term issue is whether they can stay ahead of all of the developments that are coming out of Silicon Valley. They've got to be really top-notch on artificial intelligence, on big data, on data mining, and that's our concern, is how far how their product essentially gets commoditized, because it's very difficult to stay on the cutting edge.
Yeah, it can't be a Page Industries for sure. Yes.
Yeah. So you did say...
Yeah, no, that's the cutting edge of everything else. Artificial intelligence.
Okay, so you did say that you don't have any additions, but you do have one subtraction. What might that subtraction be?
You know, I have not talked to my compliance officer, so I'm not sure if I can say that. Much happier to talk to you about where the U.S. is going than which company in India.
We are coming. Okay, we are coming to where U.S. is going, but more importantly, for the next 12 months, we are going to be preoccupied with politics. Will you be?
Well, we're preoccupied by politics, both in the U.S. Because they press mentions of trade wars and trade tensions correlate to the poll numbers for the Republicans. Chances to do better in keeping the lower and upper houses of Congress in America. And so this is a winning campaign slogan for the Republican Party, the whole issue on the tariffs. And it has injected an enormous amount of uncertainty into emerging markets, into the U.S. dollar, and into the U.S. stock markets. But that is largely about politics. Then, of course, we are concerned about Indian politics. I think what's going to be important is that the signaling and the conversation around Indian politics, it needs to keep up with the developments, because right this moment, if they had an election and Modi did not win, was not prime minister again, the foreigners, I think, would flee India. However, if over the next 10 months or so, the conversation evolves and people are comfortable that there may be other candidates and that in the parliamentary system you might have other coalitions that are put together, and Modi may or may not be prime minister. If that's well signaled, I think it can be absorbed by the market. But certainly, if the election were held today and he didn't win, it would be a disaster for terms of the foreign investors.
So what are you forecasting in terms of emerging market moves for the rest of the year? I mean, we've seen a large amount of sell-off already. Given the context that we do have hurdles like higher crude, etc., do you see more money move out of emerging markets through the course of the year?
You know, I think a lot of it will have to do with those two things, so the price of oil and the price of the US dollar. My own view is that the US dollar is going to have to weaken over a medium term. Now, it could stay strong through the end of the summer, but I think the fundamentals for the dollar points to a weaker dollar. So in terms of the fundamentals, I would expect, and you know, currencies are very hard to forecast, and this one, of course, is even more complicated because of its role as a reserve currency. But my guess is the fundamentals of the dollar just cannot hold up for that long, so that maybe by the end of August or something, we'll see the dollar start to moderate. Then I think the huge question on oil is really, what is the Saudi capacity? The Saudis said at OPEC that they would produce another, that OPEC would produce another 1 million barrels of oil a day. The Saudi Arabia is right now at about 10.5 million barrels a day, and their theoretic maximum is 12 million. But if we've got close to 1 million, 900,000, basically coming offline because the administration in the U.S. today said that they were going to have very strict controls on the purchase of Iranian oil, including sanctioning any allies of the U.S. that would buy Iranian oil. God knows how this can't be leaky, but starting in the fall. And so that's a real blow. So the new 1 million barrels a day just barely makes up for 900,000 that could come offline in the fall. So it'll really be up to Saudi Arabia to go toward full capacity. And it's unclear how much CapEx and how much time Saudi Aramco needs to get up to that theoretic maximum. So the price of oil, I think, you know, for this year, it still remains a wild card. Price of oil could stay roughly where it is, or go up a bit, or if there's any disruption, it could go up by a lot. I don't think there's a great chance of it falling dramatically, just because 2017 was the worst year on record, really, almost, for new exploration. So I think we'll see exploration in 2018 and 2019, but with these things going to take a while for supply and demand to equilibrate.
Okay. Teresa, how are you looking at the Indian interest rate scene? We have seen some sharp increases in yields. Does that alter the way you will be looking at stocks, because you have a bunch of NBFCs and you have a bank as well? Will it influence your stock picking?
We're okay. I mean, we when interest rates go up moderately, that's actually good for financial institutions. So I think that's fine. And our other companies have very clean balance sheets, so they're not really leveraged very much. So it should be for our portfolio reasonably fine to have a moderate rise in interest rates.
Okay, Teresa, it was always a pleasure speaking with you, and I understand that you love yoga, Indian food and mehendi, so I hope you come to Mumbai sometime. We can treat you to all of that and
Thank
more.
you so much for having me.
Thanks so much for joining us.